fact, no one better than to ask Gautam Shah, founder Goldilocks Global Research. Gautam, we've been boxed in a tight range for so long now, and good morning to you. Are you sensing a breakout? How are the next, say, the 1 month, next 6 months going to look like?
Good morning, Rima. I think staying in a range is actually not a bad outcome, given the kind of uncertainties that we've been dealing with for the last many weeks now, particularly on the geopolitical front. So I think in that context, Nifty and the large caps have really gone nowhere, and there have been very, very few opportunities. But I think the comeback in banking and the comeback in technology, I thought in the last few days has been very encouraging. And the comeback of overall Indian markets in comparison to the rest of the world, I think is a positive as well. In fact, today you have a scenario wherein most Asian markets are down and the Indian markets open higher. But I do believe that there is a huge bull market that continues to play out in the micro caps, small caps, and the mid caps. And our focus at Goldilocks has really been in that basket, and that's what I would recommend. And I think the best is yet to come for the broader market indices. But for the Nifty itself, I think 23,800 on the downside and then 24,600 on the upside has been the working range. We still want to believe that the market can potentially break out on the upside unless you have something completely out of the box happening on the geopolitical front. But aside of that, it does seem as if the market is still on a strong wicket. It is showing resilience, and the ratio charts of India versus the rest of the world could have bottomed out. So the 18-month underperformance that we had seen versus the rest of the world, I think that is done with. And now we are moving at par with the world or even better. And I think this trend is going to continue going forward.
All right, at par or even better. That's what the charts are suggesting, Gautam. I'd like your thoughts on the IT pack because it's been an underperformer. Chartically, do you think it's showing signs of bouncing back, or is it just bouncing back from oversold levels?
Mangalam, I think the worst is over.
Okay.
I think for the last 6 months, every time there was a recovery, it was sold into, and I think it continued to make a series of lower tops and lower bottoms. But this time is indeed different. I think most of the negatives are in the price. It has shown a lot of strength in the last 1 week while we went through a lot of geopolitical uncertainty. The numbers have been good. The ratio charts are well placed, and 26,000 on the IT index was a long-term support from where it has bounced. So I do believe that the technology index will support the Nifty. Anyway, everybody seems to have given up on it, and this is probably the best time for it to do well, and that's what the charts are suggesting. So I wouldn't be surprised if the IT index were to recover 15% from these levels, but you have to give it 6 to 9 months probably.
And what are the targets here that you have in the next 6 to 9 months?
Sorry, I didn't get you.
The targets on the IT index, and if there are stocks that you believe will lead them.
See, I think 32,200 is probably our working target from a near-term perspective, but I think it can easily do a 35,000 as well. I'm liking the mid-cap and the small-cap IT a little more because I think the large-cap IT is still going through some pressures, and I think it will keep finding selling at high levels. But I think if you have to play the proxy trade of AI in India in some sense, I think you have to look at mid-cap and small-cap IT where there are some niche names which can potentially outperform.
Okay, all right, got that. My co-anchor Rima will be breathing a sigh of relief if things just settle down because it's been very, very busy. AI one day, something else the other day, but you're sounding bullish about it on this underperforming sector. Got that, Gautam. Gautam, what about the mid and the small cap indices on the index itself? Where you think both these two are headed?
If you just look at numbers itself, the microcap index is up about 28% since the March lows. Now, that's huge by all standards. And I think across the board, we've had stocks that have appreciated anywhere between 25 to 100%. So there is clearly a parallel bull market playing out. I think people keep complaining, looking at the Nifty and the large caps, but you have to be where the opportunity is. I still feel that the best is yet to come for the microcap and the small cap index. I think probably they will do another 20% after having rallied 25% in the last 3.5 months. Money seems to be flowing in there. Valuations are relatively comfortable. I think these are companies that do not attract selling pressure from the FI side. And therefore, I think the bigger opportunity is here and there. So overall basis, broader markets, another 15% upside, while the Nifty tries to do about 7-8% is what it looks like.
Any names, Gautam, in the mid caps, small caps, micro caps, themes?
There are a lot of pockets that have come back very strongly. I think Adani is one pocket where we've been very bullish on for the last couple of months. That worked out for us, and I think it will go on to do bigger things. So this entire Adani group can potentially do bigger things from here. Maybe some correction from time to time, but the overall structural trend is intact. I think mid-cap and small-cap real estate, I think, stands out. Even large-cap real estate, I think that's probably the dark horse. Again, we've been batting for it for the last 3 weeks, and we feel that it will do much bigger things, maybe 20% upside on the index. Power and PSU, I think, are two segments where you play the proxy to the Indian economy. So that's a sector that we continue to like. And we're also seeing a good comeback in travel and tourism. And hopefully that's again a space that I think can deliver a significant upside. And not to forget the entire consumption space, which now seems to be making a comeback, because consumption is a play on the economy. And it does seem as if the market feels that the economy is going to come back. And that's the reason I think you are seeing the first signs of consumption stocks doing well.
So when you say consumption stocks, do you mean consumer staples, or is it the discretionary? Because you like travel and tourism, then there are multiple ways to play consumption. Some call it, via the NBFCs or via even the auto stocks, etc. Or are you batting for the good old HULs and Daburs and Colgates of the world?
Yeah, I think that's a good one, because FMCG, we are not so positive. Auto, we are not so positive. So that leaves us with service consumption. And I think service consumption is probably the space which can do much better. FMCG also, I feel, has bottomed out, but it's going to take time for it to do well. So you have to be very, very selective. But is it the biggest opportunity? The answer is no. All I'm trying to say is that if consumption makes a comeback, it's a good case for the Indian markets on an overall basis. But the opportunity is still financial services overall as a basket. Banking, NBFCs, housing finance companies, proxy to real estate can now gradually start to do well. So these are the pockets that we obviously like, along with PSUs.
Gautam, I liked when you said that India's underperformance versus peers has now come to an end, because it's been 18, 20 grueling months. Every morning we wake up and we've got to check what the semis have done, what the mega cap stocks have done, software stocks have done. It's been tough. So what are you seeing in the global charts right now? What gives you the confidence that India's underperformance is over?
In my 2 decades of looking at the markets, I haven't seen a scenario where India has been out of the class while there is a global bull market. And that's happened in the last 15 to 18 months. It's incredible. And I think everybody, all of us analysts, media houses, asset managers, everybody seem to be adjusting to that. But the market discounts things very fast. So all the India negatives around consumption, around economy, around FI selling, around crude prices, around AI disruption, I think is now in the price. I don't think you can make a case again on all these factors and say that we are going to get into a bear market. It can still happen, but doesn't look like based on data. And when I look at the ratio charts of India versus the world, they all bottomed out, I think, a month back. And since then, you've seen this resilience. So I do feel that since we are anyway in a global bull market, look at what US markets are doing. Look at European markets. Asia is seeing some volatility, but on an overall basis, they are fine. So I think India will move hand in hand with the rest of the world. The negatives are priced in. Now, probably the market is looking at the positives, and that's why the resilience is showing up on the screen.
Got it. All right. Gautam, talking about what is in a bull market, in January, people are feeling so good. All that glittered was gold. All that glittered was silver. However, things have turned around. Is this one ripe for a bigger correction from this $4,000 odd, and even silver almost at around $55 odd? One school of thought is silver going by the precious metal demand as well as the industrial demand. Risk reward, if you have a large heart, maybe in fact you get in. But on the charts, how's it looking?
What an incredible reality check we've seen with this correction in gold and silver. It felt like the safest pocket in the market where you can't lose money. And then silver loses 50% in value. Gold loses about 32% in value. That's part and parcel of every market bull trend. In fact, we've been lucky to have been recommended profit booking, and now we are recommending fresh entry at these levels. I think 3,900, 4,000 on gold, the area around 55 on silver are potentially levels where the risk reward is in your favor. So instead of Indian large caps, if I were given a choice, I would definitely look at investments in gold and silver. I think the correction is done with, more or less, and the chances of a bigger turnaround from here is likely. But is it going to go back to its heydays? I don't think so. It will recover, but I don't think it's going to do anything very special.
All right, just before we let you go, big numbers today from Reliance, and over the weekend there are, HDFC Bank, ICICI Bank, Kotak Mahindra, Axis, all of them as well. If the Nifty were to move higher from here on, these boys have to play a big role. So chartically, what's your call on Reliance? Very close to its 52-week low, has been an underperformer. Do you think the underperformance of the Nifty and the underperformance of the Reliance stock are now, coming undone? And a call on HDFC Bank as well, since you're positive on the financials.
No, I don't think Reliance underperformance is coming to an end. I think purely from a charts perspective, it's been quite negative, not a recommendation, just an observation. So I don't see anything substantial coming out of there. It's going to stay in a large range. But the good thing about the earnings season this time is that everybody is having very low expectations. And even if there is a little bit of a surprise, the market loves it. And the stock prices react the way they have so far. And we saw it with technology. So I still feel that if the Nifty has to break out on the upside, it will be backed by banking and technology. Banking moving to 62,000, technology eventually moving to 35,000. So I think some of these banking stocks can potentially surprise on the upside, is what the charts are indicating. I would be batting for them.
Got it. Okay, all right. Gautam, thanks a lot. Always good to hear your thoughts. We'll be keeping an eye out on the 24,600 mark on the upside. And hopefully the next time we chart from a bullish perspective, we're trading above that. Let's see how that goes. Thanks a lot for joining in.
For over 25 years, CNBC TV 18 has been the guiding force for investors, steering them through the markets.
Start your trading day with cutting-edge insights and expert analysis.
Seize every opportunity by decoding the forces that drive the market.
Equip yourself with strategies and guidance from India's biggest market mavens.
Invest with confidence as we beam live from the CNBC TV 18 Motilal Oswal studio.